We do have confirmation now from the president that both President Xi and President Trump spoke on the phone today. The call lasted about an hour and a half. President Trump says that there should be now no longer.
I think we're in very good shape with China and the trade deal. We have a deal with China, as you know.
President Trump and Chinese President Xi Jinping just spoke on the phone for 90 minutes. They didn't talk about Ukraine. They didn't mention Iran. The only topic? Trade. And at the center of it all, rare earths. Trump says, we have a deal, but there's no document, no timeline. So, what exactly did they agree on? And what does it mean for the U.S. economy?
The tweet this morning that came out from the president about his conversation with Chinese President Xi Jinping referred to the intricacies of our recently made and agreed to trade deal.
On June 5th, 2025, President Trump and President Xi held a 90-minute phone call. The topic, trade and trade only. According to both sides, there was no discussion about Ukraine, Iran, or any geopolitical tensions. The White House later said the call was productive, and Trump posted on Truth Social that a deal was already in place, just needing clarification on a few points like rare earth magnets. China's official readout, on the other hand, warned the U.S. to remember the negative consequences of taking measures against China. Both leaders invited each other for official state visits, and accepted. It sounds diplomatic. But there's a bigger question here. Is this a real turning point, or just a timeout? Because as of today, there's no signed agreement, no known deadlines, and no public list of concessions.
But we were straightening out some of the points, having to do mostly with rare earth magnets and some other things.
Back in May, the U.S. and China agreed to a temporary trade truce, the Geneva Deal. Key terms: U.S. tariffs dropped from 145% to 30%. China's tariffs fell from 125% to 10%. But the deal only lasts 90 days, and big issues remain unresolved. Rare earth minerals top that list. Trump said there should be no further questions about their importance. China controls over 70% of global rare earth exports, according to the U.S. Geological Survey. These elements are essential for semiconductors, electric vehicles, and defense systems. Recently, China has limited rare earth shipments to the U.S., affecting supply chains and pricing. Meanwhile, Trump's team is investigating Vietnam's $124 billion trade surplus, alleging that $90 billion of it may be Chinese goods rerouted through Vietnam to avoid tariffs. No deal has been reached with Vietnam yet, and tensions are growing over U.S. efforts to tighten regulations on Chinese firms listed on U.S. stock markets. Beijing calls this economic politicization. So yes, there's a deal, but the hard parts haven't been solved.
Take place. President Trump is not shy of lawfare, though. It is something that he has faced throughout the entirety of his political career. So the Trump administration is fully prepared to fight these battles in court.
All of this is playing out while Trump faces political and economic pressure at home. He's pushing hard to pass his One Big Beautiful Bill, a sweeping tax and spending package that includes the largest middle-class tax cut since 2017, no taxes on tips or overtime pay for law enforcement, and $1.6 trillion in savings, according to the White House. But the bill has drawn criticism from none other than Elon Musk, once Trump's closest ally. Musk has since called the bill a disgusting abomination, arguing it adds trillions to the national debt. So now, the trade narrative takes on even more weight. With public fights over taxes, immigration, and spending, Trump needs a win on trade to shift attention, and rare earths could be the headline he's looking for. The administration says China needs the U.S. market, but it also quietly admits that a stable deal is essential for American manufacturers who are facing rising costs, unstable inputs, and uncertainty over supply chains. If the 90-day Geneva window closes without a lasting agreement, tariffs could spike again, dragging down growth projections in both countries. Trump says, "We have a deal." But history shows that with U.S.-China trade, it's never that simple. With rare earths in the spotlight, the next 90 days may shape more than tariffs. They could decide the future of tech, manufacturing, and economic stability.
I guess we are seeing the art of the deal in action, right? Trump wasn't happy with the way the talks were progressing, so he says, hey, we're going to slap 50% tariffs on you. The EU says, no, no, no. They have a phone call. Both sides say the call was great. Now Trump's extending the deadline to July. I guess
Tariffs announced. Markets shaken. Deadline extended. If this feels familiar, it is. President Trump has once again wielded his signature tool of negotiation, the threat. From the EU to Apple to Samsung, Trump's pattern is clear. Declare a tariff, wait for panic, then maybe walk it back. But is this chaos or strategy? Let's break it down.
It was, with the president rolling out these 50% tariff threat against European countries the same day he promised to jack up the prices of iPhones with increased tariffs there.
On May 24th, 2025, President Trump shocked markets by threatening a 50% tariff on all EU imports, a move that would hit everything from cars to cheese to pharmaceutical supplies. But less than 48 hours later, following a phone call with European Commission President Ursula von der Leyen, the deadline was pushed to July 9th. It wasn't the first time. Earlier in May, Trump floated a 25% tariff on all smartphones made outside the US, targeting both Apple and Samsung. That threat followed reports that Apple was shifting more production to India instead of bringing it home. And let's not forget China. After months of tit-for-tat tariffs, Trump and Beijing agreed to a 90-day pause on May 14th, reducing duties from a peak of 145% to 30%. Each move follows a pattern. Announce steep tariffs, trigger panic, then extend the deadline, all while demanding concessions. So what's the game plan? According to Treasury Secretary Scott Bessent, the aim is simple: light a fire under the EU. In his words, the bloc suffers from a collective action problem, with 27 countries unable to act swiftly under Brussels' lead.
And so all Trump is, and look, I'm not a big tariff guy, but I do believe that it should be a level playing field. I think that's exactly what Trump is going to get out of the Europeans when they start negotiating.
Steve Moore, a key economic advisor to Trump, called the move a textbook case of the art of the deal, praising Trump for forcing the EU back to the table after a stalled negotiation. But others see it differently. Jared Bernstein, former chair of the Council of Economic Advisors under Biden, labeled it Trumpian chaos, a strategy that paralyzes small businesses and rattles markets. He warned that even if tariffs don't materialize, the uncertainty alone delays investments and hurts job growth. Let's be clear. This isn't new. In 2018 to 2019, Trump launched tariffs on China, Mexico, and Canada, then used extensions, exemptions, and side deals as bargaining chips. It worked in some cases, like pushing Mexico to sign onto the USMCA. But it also triggered supply chain disruptions and market volatility. Fast forward to today, and we're seeing the same script. Trump isn't necessarily aiming to impose tariffs. He's using the threat itself as leverage, a tactic that lets him claim victory whether or not duties are enforced. Yet even if it's strategic, it's far from painless. Major U.S. retailers like Walmart and Best Buy have warned of looming price hikes if tariffs go through. Smartphone makers, from Apple to Samsung, face impossible timelines to move production home. And EU leaders are scrambling to avoid retaliation, preparing a €21 billion counter package if talks collapse. The big question: if this is truly art of the deal, why do global companies continue to delay investment and hedge against worst-case scenarios? Trump's tariff threats may not always be real, but their impact is. From Brussels to Beijing, boardrooms are playing defense. And while the July 9th deadline is still weeks away, the clock is ticking. Not just for the EU, but for a world adjusting to deal-making by disruption.
The Port of Los Angeles, for example, saw its cargo volume last week drop around 35% compared to the
Beijing. President Xi meeting with senior leaders from about 30 countries across Latin America and the Caribbean.
A 35% crash in America's busiest port. Retail inventories thinning fast across the country. These were the ripple effects of Trump's 145% tariff shock and China's countermeasures. Now, under economic pressure, the U.S. has agreed to a 90-day rollback. Tariffs are down. Trade is resuming. But behind the handshake, one question looms. Is Beijing quietly taking the lead? And is America falling behind? In this video, we unpack what triggered the deal, how global players are reacting, and what it could mean for the future of U.S. power. President Trump's decision to lower tariffs from 145% to 30% wasn't driven by strength. It was driven by economic pressure, The Port of Los Angeles reported a 35% drop in cargo volume compared to a year earlier. Seattle and Tacoma anticipated an 8 to 15% decline. For dock workers, this translated into fewer hours and job insecurity. Port officials described the situation as chaotic, with difficulty planning labor and operations. Retailers, meanwhile, faced thinning inventories, with many estimating only 5 to 7 weeks of stock remaining. This rollback wasn't a strategic maneuver. It was a short-term response to mounting logistical and political costs.
The two signed several agreements, essentially allowing China to invest more there in order to buy more products from Brazil.
While U.S. companies rushed to capitalize on the tariff reprieve, China moved in a different direction. President Xi hosted leaders from 30 Latin American and Caribbean countries in Beijing, signing agreements in infrastructure, mining, and AI cooperation. Chinese private firms pledged billions in new investments. Beijing also secured a 157 billion yuan currency swap with Brazil, reducing reliance on the U.S. dollar. While the U.S. stockpiled goods, China was building new trade pathways and financial instruments. Rather than reacting, China used the moment to expand its global position, especially in regions the U.S. once considered within its sphere of influence. Trump's 145% tariff led to a rapid collapse in trans-Pacific trade flows. Maersk North America reported a 30 to 40% drop in shipments from China. Many importers halted orders entirely, uncertain how to price or move goods. Some businesses rerouted products through Canada to avoid high tariffs, trucking them overland once the rollback was announced. Economists warned of upcoming consumer price increases, especially for seasonal goods. Logistics costs surged, and shipping lanes were destabilized. Meanwhile, Brazil expanded agricultural exports to China, and electronics producers in Southeast Asia stepped in to replace US-based suppliers. Rather than a temporary disruption, this marked a longer-term diversification away from American trade routes.
So it's common sense that Trump will not get where he wants to. So he talked about a reset the relationship, but I believe he actually...
Yes, a deal was signed. But Chinese analysts and officials quickly framed it as a concession, not a compromise. Zhou Bo, a retired PLA colonel, called it a first-round win for China, saying the rollback came from U.S. weakness, not mutual agreement. Chinese state media doubled down on this interpretation, stating attempts to isolate China were futile. China, now the largest trading partner for over 140 countries, views itself as indispensable to the global economy. As one commentator put it, trying to isolate China is like trying to isolate the world. The U.S., meanwhile, shifted from maximum pressure to reluctant de-escalation, without securing major concessions in return. Beyond the headlines, this episode reflects a deeper credibility gap for the U.S. retailers, say planning has become near impossible. Port officials struggle to manage staffing under volatile volumes. According to interviews from the Port of LA, only 8 container ships docked recently, down from 10 to 12. Hundreds of dock workers waited for jobs that never came. Even as tariffs eased, businesses warned the damage had been done. Short-term relief doesn't undo long-term uncertainty. While China expands trade networks and reduces dependency on the U.S., America finds itself reactive, not proactive. The tariff war didn't break China. It exposed fractures at home. So after all the tariffs, disruptions, and political theater, where does this leave us? The U.S. pressed pause, but China pushed forward. While American businesses scramble for clarity, Beijing is locking in trade routes, alliances, and influence. This wasn't just a 90-day truce. It may be a glimpse into a new economic order, one where the U.S. no longer sets the terms.
President Trump is now on his way back to the U.S. after his 3-nation tour of the Middle East. He claims to have secured $12 to $13 trillion worth of investments in U.S. companies.
Celebrating what he's calling a historic trip. He says it was a, quote, fantastic moment for our...
President Trump just wrapped up a high-profile trip across the Middle East. He says it was a major success, claiming up to $13 trillion in future investments into the U.S. economy. But what deals were actually signed? And what are the economic and ethical questions surrounding this visit? Let's break it down. Over 4 days, President Trump visited Saudi Arabia, Qatar, and the United Arab Emirates. The events were highly choreographed, with red carpets, mounted camels, and even red Cybertrucks leading his motorcade in Doha. Trump described the trip as historic and said it marked a turning point in U.S.-Middle East relations. According to the White House, the tour resulted in investment agreements worth over $2 trillion, with potential to reach $13 trillion in the long term. But what's important to note, most of these numbers are non-binding announcements. There were no public details or documentation released by the U.S. Treasury or Commerce Department confirming the full scope of the deals.
He also was on hand for announcements of billions of dollars worth of new investments and new purchases by both the countries themselves and by major business.
From what was confirmed, several deals were signed across key industries. In aviation, Qatar placed new orders for Boeing aircraft. In defense, Saudi Arabia reportedly signed what the White House called the largest arms sale in U.S. history. In technology, the UAE announced major investments in American-made AI chips, following the lifting of restrictions on sensitive exports. These are real business transactions, and they benefit major U.S. companies like Boeing, Lockheed Martin, Raytheon, and NVIDIA. But for the average American worker, the benefits may not be immediate or widely felt. One of the biggest headlines of the trip came from Qatar's proposed gift, a private Boeing aircraft reportedly worth around $400 million. Trump said the plane would be given to the State Department, but many observers, including some of his usual allies, questioned the ethics. Even conservative voices like Laura Loomer and Ben Shapiro raised concerns about whether accepting such a gift would violate federal rules. Another controversy came from Trump's meeting with Syria's interim president in Riyadh. He announced plans to lift sanctions on Syria, a country previously under heavy restrictions due to its civil war and human rights record. In exchange, Trump said Syria agreed to several U.S. demands: support for the Abraham Accords, normalization with Israel, expelling foreign fighters and terrorist groups, helping control ISIS prisoners in the region. Critics questioned how enforceable these promises are, and whether there was proper vetting or transparency behind the decision.
Their own way. He believes that peace through strength is the strength of the American economy, jobs, jobs, jobs back home. And so they are investing in huge sums in the American economy. Everything from...
Unlike past Middle East trips that focused on diplomacy or security, this tour was more about economic partnerships. Trump traveled with a group of U.S. CEOs promoting American industries like aerospace, semiconductors, and defense. He also mentioned that the U.S. will soon send new tariff rate notifications to several countries, part of his broader strategy to push for fair trade and bring investment back home. According to Trump, letters outlining the new tariff structure will go out within 2 to 3 weeks. This follows his earlier Liberation Day tariffs announced in April, which were later revised down to 10% base rates. President Trump left the Middle East with a mix of bold announcements, real business contracts, and some unresolved questions. The investments could boost U.S. exports and support key industries, but it's still unclear how much of the $13 trillion will materialize and who exactly will benefit. At the same time, ethical concerns and regional complexities remain. So while the headlines look big, the long-term impact depends on what happens next. If you found this analysis helpful, subscribe and leave your thoughts in the comments. We'll be watching this closely.